Today I cover a popular Ichimoku trading strategy called the Kumo Breakout. Stay tuned, back after this brief message. Darwinex is a UK FCA regulated broker and asset manager on a mission to disrupt the financial trading, investing and asset management industries. As a trader, you'll benefit from cost-effective market access via multiple trading platforms and APIs. These enable trading and investing in any US stock, over 60 of the most liquid futures contracts, FX and CFDs. You can even diversify your portfolio by buying and selling other traders' strategies as investable assets themselves. So, if all of that sounds interesting, learn more by clicking on the link top right now or find further links in the description right below. Now back to today's tutorial. Following the Tenkan-Kijun cross strategy that I looked at last time, today I focus on a different strategy as part of this Spotlight on Indicators series, and this is called the Kumo Breakout. Let's take a look. So just a quick reminder of some of the general principles that I'll be using as I go through these strategies. The first is that I'm going to keep things really simple. In my experience, that produces the most robust trading strategies. All the strategies that I'm looking at this point will be what I'm calling a starting point. I may well change and adapt those at the next research and development phase of the process. But of course I'll be presenting that so you'll see any changes that I do make. Next, in terms of my analysis of Ichimoku, I will be only using this indicator. I won't be combining it with MACD or RSI or any other indicator. Ichimoku is often cited as an all-in-one indicator. So different components of it can be used as filters, signals and triggers. And so that is how I will be testing it. And then the fourth principle is that any rules that I talk about must be capable of being fully automated and then tested. For me, there is no room for grey areas, judgment calls, or ifs or buts. For me, the rules must be clear and capable of being written into code. Now, a quick warning, and please take a read of this. I went through it in the previous episode, but the bottom line here is that you need to take responsibility for testing out any strategy. Don't believe anything I say or anybody else on YouTube or on the web. Certainly get ideas, but then thoroughly and robustly test those ideas before you risk any capital. So on to the Kumo Breakout strategy. I've documented what the long position rules are here, and you just reverse these if you were going to be looking at a short base strategy. And here, for a long position to open, it's necessary for the price to pass through the Kumo or the cloud and then break out above it. Now, just looking at charts, I know that this type of strategy will produce far fewer trades than the strategy we saw last time, where we were looking at the Tenkan-Kijun cross. And that's because we might get 4, 5, 6 crosses during a longer term uptrend. But with this strategy, the Kumo Breakout, we will only get one entry signal at the very beginning of a trend and one exit signal when that trend has finished. So gut instinct tells me that this will produce 5 or 6 times fewer trades than that other shorter term trend following strategy. But this second rule is actually the same rule that we used in that strategy last time, which is that the Senkou Span should be above the price at the point at which you enter the trade. Now again, because the Senkou Span is plotted 26 periods behind price, that is where we need to do that comparison 26 periods ago. Now I have actually got an additional rule here, which is an option in relation to the Senkou Span, and that is that it is above the Kumo. So I might try both of these options to see which works best. Both are indicative of the start of an uptrend, but one may well perform better than the other in terms of using that as a filter. So I will test both of those out. Now, in terms of the profit-taking closure rules here, I'm thinking that an entry of the price back into the Kumo, or possibly even holding on to that in case the Kumo provides support, right the way until the price breaks through it, indicating the end of that trend. And so I'll probably try both of those options and see which performs best. And then in terms of the initial stop loss, this is probably going to be set either below the upper range of the Ichimoku Cloud or below the lower range as a starting point. But again, I wouldn't expect that stop loss to actually action very often, and it's more the organic exit caused by price breaking into the Kumo at a future time that is more likely to produce the exits in this particular strategy. But you should, of course, always have a stop loss there just in case something happens with the strategy, it stops running for some reason, and it just gives you that fail-safe exit. So this is the same price action that we looked at last time, and if you remember, we had an entry point here as the Tenkan-Sen crossed over the Kijun-Sen. We then exited here, re-entered here, and that happened a few more times as well as this uptrend ensued. But as I said before, the breakthrough of the Kumo Cloud will produce far fewer trades, but if you notice, it will hopefully get us in earlier here than it did last time, and it will keep us in this trend for much longer. So it's a longer term strategy than the Tenkan-Kijun cross that we saw previously. Now let's take a look at the price action here. Price actually breaks out and closes above the Kumo at this point here. But let's look at our other rule, and that was that the Senkou Span is above price or possibly above the Kumo at the time at which this happens. So if we go back 26 bars, that's taking us to here, and as you can see, it is only just above the price, but it isn't above the Kumo. So depending on the rule that we're going to use there for the filter, this may or may not have allowed this entry to occur. Instead, we might have to wait for those conditions to be right. Now, as you can see, the Senkou Span originally starts to move away from the price action and get some decent distance at this bar here. So let's take a look at what the price action would have been at this point in time, and the price action would of course have been 26 bars in the future, which is this bar here. So depending on how we develop our rules, if we're happy to wait for all of those conditions to be valid, then we could enter on this bar here, because we've seen now a clear breakout from the cloud. The Senkou Span is now above the price and above the cloud, and so all the conditions become valid at this point here. And then if we used the closure rule, which is the price either entering the cloud or indeed breaking down below the cloud as an indication that the trend has ended, then we have to come all the way up to here for that first rule. But if we decided that we would allow price to come all the way down to here in the hope that the cloud provided some level of support, then we'd still be in the trade at this point, and it wouldn't be until this point here when price broke down south below the cloud that we would then exit. But in this instance, both of these would have produced very profitable positions for us. Now, I've said this before, and I think it's worth saying again, we need to be looking for this clear separation of the different components of Ichimoku. If you see price action like this, where the price is continually crossing over the other parts of the indicator,
The indicator lines themselves are crossing over each other. We have the Ichimoku Span up and down, the Tenkan-Sen, the Kijun-Sen. This is going to produce lots of different whipsaws. So whenever your algorithms determine that we're in this period of time where there isn't really any pattern to the indicator at all, you should stay away from any trade decisions. And it's only when we start to see this nice separation of the components that this gives us the indication that we're in a more established trend mode. Okay, now one other rule that I will want to be testing out here is looking to see whether the Kumo is bullish or bearish 26 periods ahead of the current price action when we're considering opening a position. And this could well provide us with an additional effective filter, but of course until we try this out in that research and development phase, we won't know. So just to reiterate the warning once more, and as I said before, if you are in any doubt whatsoever, or you are unable to properly test these out for yourself, then you're probably best sticking to a demo account. Don't trust anything I say or anybody else says. You must take responsibility to satisfy yourself that any strategy you trade is suitable for you and your objectives. Okay, so we have 3 more strategies that I'll be looking at in the next 3 episodes. And then, of course, we'll move into this R&D and backtesting phase, where we'll start to look at some of the results that these strategies generate. Now, if this is the first episode of the series that you've seen, in a moment there'll be a link to the entire playlist that appears on the screen where you can get access to all of those episodes. Alternatively, there's a link in the video description. Okay, that's all we've got time for this episode. Until next time, trade safe.